Hi everyone, and welcome to another Software and Internet Monthly Market Report brought to you by Sanford Advisors. Once again, another very busy month for software M&A. $27.7 billion invested in the month and 163 transactions. So continuing the trend of prior months where we're really seeing a heightened level of activity. The median multiple for the month was nearly 5 times at 4.9. Interestingly enough, there was many multi-billion-dollar transactions that happened. The only one with a disclosed multiple was ProQuest, which was acquired by Clarivate for 6.1 times revenue. But that was a $5.3 billion transaction. There was obviously deals done, $4 billion for Boomi, $2.5 billion for Divi, and $1 billion for Noble Systems. So lots of very large transactions that continue to drive the market higher. In terms of the level of activity that we're seeing. You can see how that kind of annualizes out. At the current trajectory, we're going to be way ahead of the previous high of 2019 and 2020, considerably above that, not only in terms of a dollar volume of transactions that are happening at a run rate of $320 billion right now, but also more encouragingly, especially for the mid-market, is the recovery in the number of transactions. So that's been obviously, we've talked about this a lot, about that sliding from 2018 down to 2020, but that has really recovered, and we're on a real trajectory right now to really significantly increase the number of deals. And the best part that is being felt is obviously in the mid-market. The smaller transactions are definitely seeing a lot of activity right now. In terms of the multiples, we tracking here the non-SaaS versus SaaS multiples. So SaaS multiples for the year, really spiked up from a dip of 4.2 last year. I would think this normalizes. It's probably, based on just a limited number of data sets. And it probably normalizes at that kind of 5 to 6 times that we've seen pretty much consistently, for the last couple of years. And then, on the non-SaaS basis, it's dipped a little bit, but again, very consistent in that kind of high 2s, low 3s. And I wouldn't be surprised if this kind of levels out somewhere between 3 and 3.5 like it did last year. In terms of the activity, you can really see this, and we've been talking about this a lot, the dip in activity, even pre-COVID. Like if you look at the start of this chart in 2019, the deals kind of averaged 80 to 90, maybe 120 a month, but really the average was around 100 deals per month. And then going into COVID, it really dropped in April, May of last year. And then it's really, since then, really just gone through the roof. And so we're seeing levels of deals that we haven't seen in a few years on a monthly basis. And this is really encouraging for us. I don't think this slows down for the rest of 2021 at least. But it's very encouraging, especially once again for the mid-market. On the VC side of things, similar sort of trend, $8 billion invested in May, 371 transactions, and the median deal size of 4.1 million. So very similar metrics that we've been talking about the last couple of months. Obviously on the Canadian side, a very large deal for Wealthsimple, which raised 600 million US from Greylock. Very encouraging for the Canadian ecosystem. But then you've got other deals as well that were on the large size, with Daily Pay raising 500 million and Bullish raising 300 million. So some very large transactions that continue to kind of happen. And you can see that, again, if we show that same trend and the run rate that we're on and annualize it for 2021, you're going to basically more than double last year's record of capital deployed. And the number of transactions has kind of reversed that slide that we saw over the last couple of years, which is, again, a very encouraging sign, especially for that early stage capital that really felt the brunt of the decline over the last couple of years. And then lastly, on multiples, you can see this, as we've said in prior months, there's still not enough data to really say that these are the new multiples. And I'd be very surprised if late stage multiples stayed at 25 times. Revenue. So these are definitely going to normalize. I would think they normalize much more consistent with where we finished off last year in terms of multiples. But again, very encouraging signs so far. Anyway, that's it for another month. If you want more details, we have a software monthly report that has a lot more details than this that goes out to clients of ours. So feel free to reach out and talk to you in another month.